Good morning, everyone, and welcome to another edition of the Forex Technical Market Update for June 25th, 2015. Okay, in front of us, we have the daily chart of the US dollar index. And the US dollar index on the e-signal charting package, the symbol is DXAO. Some folks have been asking what is the symbol or the ticker symbol on e-signal. It's DXAO. Okay, now the US dollar index is a composite of the different currency pairs, and it gives a general overview of what is happening with the US dollar. And as we can see here, the market is in a consolidation pattern. If we just take, or this is actually a better line here, trend line there, and here, we see that the market went up, market was rallying, retraced slightly, attempted to take out this high, and failed and broke down below this area of support. So that was fairly bearish for the US dollar. The market came down. This high here did not go above this high. So the question is, are we in a retracement mode? Is this start of a B, C, with this ultimately breaking down to the D point? And remember, the US dollar, if this happens, that means most of the currencies will strengthen against US dollar, because when the US dollar index is moving to the downside, that means currencies like the euro, the British pound, etc., are strengthening against US dollar. So are we looking for a new D point below this point here? Or alternatively, is this a pullback here? So is this, for example, A, B, the market pull back to C, and then are we going to rally up to D here? And these are the two scenarios that can play out in the US dollar index. And that is one of the reasons why we have the bulls and bears battling it out in this region here. Because you have large funds that are taking the bullish view and funds that are taking the bearish view. And anytime you have a situation like that, what happens is this consolidation pattern, as you can see here. So that's what's happening on a broad, a big picture overview on the US dollar index. The euro, similar pattern. We have the consolidation here. Is this market was in a pretty strong down move. Market retraced, attempted to go down again, did not take out the low near 105. Market made a high. So is this A, B? Is this a C for a breakout to D? Question. Or alternatively, with the euro, we came down here. Is this a retracement? Is this A, B, C? And will the market then head down further to D? So those are, again, your two scenarios with the euro. And why you have this consolidation pattern is because the bulls and bears are battling it out. I know some of you wonder why sometimes we have these consolidation patterns. It's because people are looking at the chart two different ways, and they have two different viewpoints. And remember, if everyone had the same view of the market, then there wouldn't be a market. In markets, you have bulls and you have bears, and it's a constant battle between the bulls and the bears. Sometimes you will be right, sometimes you will be wrong. The key to making money in the markets is executing proper risk management. Okay. Now, some markets that are not and let me just, before I go, let me just look at the Canadian dollar. We spoke about this yesterday. Again, we have consolidation. The reason is because the market broke down here, and folks are probably seeing this. The bears are seeing this as A, B, retracement to C, and will this market break down to the D point? Or alternatively, with the Canadian dollar, are we A, B, C here with a rise above this high? Will that make D? Though that's a scenario playing out in Canadian dollar, and that's why again we have this consolidation pattern right here in the Canadian dollar. But moving on to markets that are clearer and that are trending and that are not in consolidation, we have the British pound, Australian dollar, and this is a market we had been following over the last couple of months. Remember, the market was in a consolidation. This market was in a consolidation because you could have looked at it that the bears probably saw this market broke down. Was this A, B, C to a breakdown to D? Or the bulls saw it like this. The bulls saw A, B, C with a new high at D up here. And that scenario turned out to be correct because, as you can see here, the market did indeed make a new high. So A, B, C, pullback, D. This was a new high that happened in the market. A, B, C, D. And for those of you who took that one indicator course, you'll know exactly what I'm speaking about in terms of counting your waves and counting the flow and looking at the flow of the market, because it's very important. And just to comment that it's always, if you are unsure of which direction to be going with, I would say go in the direction of the prevailing trend. Yes, you'll be wrong sometimes, but you'll be right more than you'll be wrong, because remember, these trends can last for a couple hundred pips. For example, let's look at this British pound, Australian dollar. This has been on an uptrend since 2013. Since March, it bottomed in February 2013, and we are now in June 2015. So this is over a 2-year run to the upside on this currency pair. So if you are in doubt, I would say follow the prevailing trend. Now, taking a look at this British pound, Australian dollar, we have support in this $2.250 region. Support is here, as you can see on the 4-hour chart, and resistance is up above the high that was made. This is how it looks on the daily chart. These are support and resistance points in this market. British pound, Japanese yen, the market, this is not a market that there is really too much doubt about. I mean, as you can see, this is a broad uptrend, and the prevailing trend is clearly up. And if you sometimes have doubts as to which currency pairs you should be trading, look to the ones that are in strong trends first, because they will offer up the best opportunities for you to make money. And that's what our portfolio has been doing. Our portfolio has just been following the currency pairs that are clearly in uptrends. or downtrends and making money off of those. Okay, so the British pound Australian, British pound Japanese yen is in an uptrend. Resistance is up at the 196 region, and support is down at this hammer low that was made today. And that exact point is 193.48. Looking at the 4-hour chart, we see 193.48 for the British pound Japanese yen. If this market pulls back further, we will be taking profits for our members on this pair, which will be a very nice profit for us. Similarly, the British pound was close to getting stopped out in terms of hitting our profit target, but the market actually rallied today and is rallying today. So we're still involved in this British pound trade, and we're still looking for a stronger breakout of this head and shoulders reversal pattern. Okay, I hope this market update lend some clarity to what's happening in the markets and which direction you should be trading, and why actually currencies end up in consolidation patterns. If you want to have the signals sent to your trading account automatically, you can click on the link below to get started. Until tomorrow, this is Beyond. Thank you very much for listening. Have a wonderful day.